Welcome to Market Overtime here on the Schwab Network. I'm Diane King Hall. On today's episode, we are tracking the road from Wall Street to Hollywood. A finance star is joining us, and her story is so special it's being turned into a movie. Lauren Simmons' track record includes being the youngest female trader on the NYSE floor, the New York Stock Exchange to be precise, the second ever black woman full-time trading on the floor, and the host of Money Moves podcast. Without further ado, let's bring in Lauren Simmons, author of Make Money Move, A Guide to Financial Wellness. Lauren, thank you so much for joining us today. All right, let's dive into kind of your origin story here on the floor.
Yeah, so, it's been a few years now, and honestly, it seems like yesterday I was this young girl from Georgia that had moved to New York, and out of all opportunities, I ended up being presented with a job as an equity trader at the New York Stock Exchange. And at the time going into it, I didn't realize that I would be, at the time, working on the floor, one female of 250 men. Recently out of college, it seems surreal, but the 2 years that I got to work on the floor, I got to learn so much on how markets move, what it meant to have a voice, and to be open and flexible to all the opportunities that came with being on the floor.
When was it that it hit you that you were a trailblazer? I remember I loved seeing you down here. It's rare to see a woman down here on the floor. What was that moment where it was like, wait a second, I'm creating a milestone here? What was that like?
Honestly, even in 2024, I don't even feel like I have. Because when you're in it, and I'm still actively in it, obviously I'm not no longer on the trading floor, but I just think being a female in general in a male-dominated space, I only know how to operate as Lauren Simmons, as a female, as a Southerner. And so I don't think there's really ever been a moment where I felt like, wow, I'm a trailblazer. But to identify and know that I am an other in such a male dominated space is very blaring at all given times. And it's just always been really important to me to understand who I am authentically and to always show up as Lauren Simmons in any and all spaces that I go into.
All right, Lauren, let's talk about the road since being here at the stock exchange. You have this book, Make Money Move. What was the impetus for that? What was the idea for that?
When I was transitioning from the New York Stock Exchange, my story had gone viral at the time, and I was receiving so many messages from people that look like me, young adults, people of color, women, men, um, everywhere, internationally, here, domestically, and the same repetitive question kept coming up. How do I invest? What should I be investing in? Which is I always say, a vague question because it's so tailored. Personal finance is tailored to you, it's personal to you and where you are at in your life. And so I was ready to make a book that was geared towards everyone, but specifically people that were younger that had been isolated from the traditional investing advice that you probably get on CNBC, and to break it down in a way that they could understand and they could utilize the steps in the book to be able to help empower them. So it was a process that took 2 years. I now know any project that's in development doesn't happen overnight. It takes a team, it takes years. But once I was able to release it last November, I just was so grateful, and the feedback that I've gotten and the way that I've impacted people's lives, and to really, give a book that outlines everything that isn't, we're not trying to make you rags to riches. I'm giving you information that you can be able to utilize at any point in your career. And, it's up to you to figure out what makes the most sense for you and where you're at.
So I'm not sure if this comes up in your book. I know you and I have talked about this before, I've seen it mentioned before in the press, but sometimes they get the number wrong. And, we have to talk about numbers in the world of finance. What you first earned when you were here at the stock exchange. Tell us that number and how you made it work, because many people couldn't even fathom that.
Yeah, so I think, a lot of people thought I was making six figures while working at the New York Stock Exchange. The reality is I was only making $12,000, and I don't like the narrative of the story, especially the feedback that I've gotten, even with, the firm that I used to work with. i- Making it seem like, it's a victim story or it's not a positive thing. I always look through the lens and the eyes of everything happens for a reason. And what I will say is that, yeah, $12,000 is, you can't even breathe in New York City. And I'm so grateful that I was able to live with my grandparents and they could be able to help me for the 2 years that I lived there, which I know is not everyone's story. But the opportunity that I got to gain, the exposure that I got to have, the relationships that I got to do, um, go beyond the $12,000 that I made. And to clarify for people, no, that wasn't a commission. I never received additional income. The 12,000 was just that. And I'm grateful. And you saw me on the floor. Many other people saw me on
Hmm.
the floor. Like, I always came in with a positive attitude. I was grateful for the
Yeah.
experience. And depending on where you were at in your life, you may be able to afford to be able to take a lower job. Now, where I'm at today at 29, at 21, if I had to do it again, 22, yeah, probably. At 29, just based off of where I'm at, I don't know if I would say
Right.
yes. But what I will say to people is always value your self-worth and what it is that you're going to
Mhm.
gain out of it. I don't always believe that exposure is everything. I don't always believe getting a lower salary will mean something, but it's always just looking at the rate of return and what are you looking to get and if it makes the most sense to you. My mom absolutely did not want me to take the job at the New York Stock Exchange. She's like, "Nope, that pays no money. You're better than
Mm,
that." And,
mhm,
and we go back and we laugh about it now, but it whatever makes the most sense to you is the
mm.
advice that I would give to people.
All right, Lauren. So you talked about the price that you are willing to, for instance, accept, and kind of seeing the value in different opportunities, even if the salary might not align with exactly what you're looking for. It reminds me of a video I saw that you did with Hello Sunshine, and this kind of takes your path from Wall Street to writing this book to this Hollywood film coming up. But let's kind of dive into a little bit of some of the things that you say in this video. You have 7 steps that you talk about, and your values component reminds me of what you say about goals. What is it? What is this first step that you tell people about when kind of thinking about their financial benchmarks?
One, understanding where you were at and understanding what your salary is after taxes. I think a lot of people usually want to start, oh, I make a salary of $60,000. You don't have 60,000. You're paying taxes on that. You're getting taxes taken out of that. So whatever your actual take home is where you're starting. And then from there, we've all heard of the 50/30/20 rule, 50% going towards your needs. I like to flip the 30 and the 20%. So 30% going into savings and 20% going into wants. And why I flip that, my generation and younger, many of us have side hustles. Many of us are having
Mm,
multiple streams of income. And with that being said, those checks are not on a consistent bi-weekly
mm,
basis. And so, and specifically for myself, I get really large deals and I'm getting maybe three, four deals a year. We're talking about a year. And I need to make sure that I am putting that money towards savings. I'm growing it. I'm managing it because it's not as simple as getting a biweekly check. And that is
yeah.
why
I
I think it resonates more to people that have multiple streams of income.
I was curious about why you flipped the 50/30/20 rule, and I was interested to know about why. I find it interesting, especially I wondered if it also had to do with kind of the inflationary environment we've been in for the past couple of years. Because you're right, a lot of people say the 50% goes towards needs, the 30% towards wants and 20% towards saving and investing. Or if you're not at that saving and investing step, some people say that that goes towards the debt. So it's interesting to hear your take on why you flip the 30 and the 20. Do you ever see a need to kind of flip it in the reverse towards what the traditional view is on 50, 30, 20?
Once you get into a mindset and once you've done something, I don't see in my mind ever flipping it. I mean, having more cushion for savings is better. Having more money for a rainy day is better. And you're right, we are in an inflationary period right now. We most likely are heading towards a recession. I know people are saying soft landing. And I just think the reality of what the next year is going to look like is we should, and we see it. We see consumers stepping back and not spending as much money. The earnings for Airbnb and Disney just came out. People are definitely taking a hard look at their finances and not putting more money towards their wants, but putting more money towards, again, either their needs or having a cushion for their savings.
That makes sense. And yeah, we have noticed that there has been, kind of some slowdown in some of these consumer-facing companies. And we see all these different companies trying different approaches for deals and value meals to get people in the doors. But let's talk a little bit about the investing landscape. So you just talked about kind of the split, and then people should be saving more rather than less. But given what we've seen recently, we had a lot of volatility recently in the market. The R word has come up. Is there a recession coming? Some industry watchers say it doesn't look necessarily like a hard landing now. Some are concerned about that. What is your view on, just how people should be investing now when we're thinking about equities, fixed income, et cetera?
For me, I'm so conservative when it comes to investing. So I'm not looking at doing anything that is going to hurt the savings that have grown. So I am still very much into treasuries, even though treasuries are not as high as they were at the beginning of the year. But it's still a safe place. CDs are still around 5%. And so we're talking about safe money. I would be looking to put money towards that. Obviously, people that are strictly, I want to invest in equities. They are seeing this as a time where it's a bargain, where many stocks are at a discount, and this should be the time that you should be investing. I don't think there's any of either one of those advice. I don't think is bad. I think it honestly comes down to your mindset, understanding what kind of investor you are, what risk you are looking to take, and looking at where you are and making the best decision for you.
It's so fascinating to hear you as a proponent of fixed income, considering what your background is, being down here on the floor of the New York Stock Exchange. But I know that you also like alts. You like alternative investments. What sectors of alts do you like, and why?
Well, first and foremost, real estate, but outside of real estate, art, fine wine, collectibles, it is a booming market for a reason. And if there is an opportunity for anyone to be able to get into, again, it's going to take research. It's understanding what your market is. I know, for instance, sneakers, the resale value is, projected in the next 5 to 10 years over $1 billion. I'm not a sneakerhead. I'm rigorously trying to learn so I can be able to get in. But for me right now, my niche has definitely been art and studying art, understanding. I mean, again, a goal of mine would be to be able to purchase a Basquiat painting. But as time goes on, it's becoming maybe a lot more unobtainable. But there is a reason why collectibles is something strong. We know it's going to grow in value, some, not all, and it's not on par with the stock market. And so I think that is another alternative that people can be looking at. But again, it takes research, it takes time. Um, and I just think even from when I was on the floor into where I'm at now, like there have been many quote unquote booms that have happened that have
Right.
been bust. NFTs was going to be the next big thing, and people
Right.
needed to be investing in NFTs, and that is considered an alternative asset. For me, what I look at when I'm thinking about investing in an alternative asset strictly is history. Now, history doesn't mean that it's a streamline to what the future will look like, but it gives you a better idea and something that is rooted in history, years and years and years. You can get a better idea of how that is going to perform in the future.
Okay, and really quickly before we get to, because I want to talk to you about the movie, but since we're in the space of alternative investments and say riskier investments, crypto. What are your thoughts on crypto?
I'm still not a crypto fan. I and people are gonna say, okay, you're missing out, and I've missed out on the train. I missed out on the train, but for me, again, how I see it, there's just not enough history. I think people that have that mindset that can look at something without the data and just have a higher risk tolerance. Kudos to them. I don't think there's a wrong or right. I think that crypto still has a long way to go. I mean, I do think now we are seeing that it's very much how it moves on par with tech stocks, which I do invest in tech stocks, but the drops aren't as volatile as they are within crypto. So, you know,
Do you like any of the other Mag Seven, like a Meta, like an Alphabet, Nvidia? I know there's been some volatility around those recently because of the market moves, but what's your take around those?
for the most part, yeah, I like them. I think again, it has just been a volatile year for everyone. So I don't, for me, I'm less concerned about the noise that is going on a month to month, day-to-day basis. And I'm looking long term. What is the vision for what they're thinking about doing long term? And I think a lot of those stocks, unless there is some grand news that comes out on what their long-term play is, where I say, you know what, it doesn't make sense to be investing in these stocks. For me, I'm still a big proponent. I could care less about what is going on. I mean, I know people news needs to circulate, and I'm sure it's great headlines, but I'm always thinking long term. I'm never thinking about in this moment, and in this moment you're going to see a lot of stocks just not performing that well, especially as we talk about the R word and where the trajectory of the economy is going in the next year.
And then talk to us about the movie. You've gone from Wall Street to Hollywood, as we talked about this. Tell us about, you've partnered with Reese Witherspoon and Hello Sunshine. Tell us about what you can tell us about the film.
Yeah, I'm an EP on it. I'm really excited. I'm really excited to be we had a full overhaul on the script and rewriting it. Again, it's been a work in progress. Um, you know, I've just learned a lot about what it takes to develop a movie and again, where we are at in the economy. I think when people think finance, it's just niche to finance, but really all of these different industries are all interconnected, with entertainment being one of those. And there's been a big overhaul within the entertainment space, budgets, where they're allocating that money to go towards. And it is. We're overall in a different time. I did not think that it would take as long to develop a movie, but I am grateful for the process. I'm grateful for the writers. I'm grateful for the authenticity that is happening with this project. And, when there is more to share, I will be very excited to share that with everyone publicly.
Let's go back to your book and then talk about the takeaways that you want people. What are the top three messages that you want readers to get from your book?
One, that you can. So many people oftentimes feel like they can't, they don't know where to start. My book is a place to start. And I also encourage people, don't use my book as the only golden ticket. I want you to get as much information as you can with all the information that is out there currently for you to be able to access. I don't want anyone reading one source of material and using that as the only way. And I highly, highly encourage people, even when reading my book, even throughout the book, don't just take my book. This should be the catalyst to do more additional research and to make it make sense to you and where you are at in your personal financial journey.
And then from here, so, you have a lot of irons in the fire. You have this book that has come out. You have the movie coming up. What's next? You have your podcast. Are you planning on writing another book? What's next for you?
The sky is the limit. I mean, I just want to keep being able to empower people when it comes to personal finance, and keeping these conversations going, continuing to be a credible expert within the space. I know that there's been a boom of influencers and people talking about finance. I have never been one to highlight or paint an unrealistic picture. And I do also am cognitive and aware of what is going on every day in the economy. And so, I just want to be able to continue to give a little hope to people, but to continue to keep having the conversations to plan for the future and navigating the best way that they can.
All right. Thank you. That was Lauren Simmons, author of Make Money Move, a guide to financial wellness. Thank you for joining us on this edition of Market Overtime. To catch all of our episodes, visit schwabnetwork.com or head to the Schwab Network YouTube page. I'm Diane King Hall. Thank you for watching.